Let's talk about, take a look at the exercise problem 6.2 as it relates to the Capital Projects Fund. So we'll look in the book, and the transactions of a Capital Projects Fund can be derived from its basic financial statements. Crystal City established a Capital Projects Fund to account for the construction of a new bridge. During the year the fund was established, the city issued bonds, signed and encumbered $6 million in contracts with various suppliers and contractors, and incurred $4.3 million of construction costs. It temporarily invested a portion of the bond proceeds and earned $20,000 in interest, which was received in cash. The accompanying statements of revenue, expenditures, and changes in fund balance and balance sheet were taken from its year-end financial report. Based on the data in the two statements, as well as those provided in the paragraph above, prepare journal entries to summarize the transactions in which the fund engaged. It's important to prepare budgetary entries, but not closing entries. So we can tell just by this information that's been provided to us that the city issued bonds, they were signed and encumbered, which are the budgetary journal entries. $6 million in contracts were ordered, which would also be budgetary entries. And then it incurred $4.3 million of construction costs. So that helps us to know where we would reverse out those budgetary entries. And then earned the $20,000 in interest. So let's take a look at the financial statements. You can see here, cash grant from the state of $2 million. It was budgeted to be $2 million. The interest came in of $20,000. The expenditures budgeted were construction costs of $5 million. What actually was spent, construction cost of $4.3 million, and bond issue cost of $50,000. Then we've got our proceeds from our bonds of $10 million. We have a premium from the bonds. We then have transferred those bond premiums to the debt service fund. And then we have an increase in reserve for encumbrances. That is still outstanding. And so that helps us to kind of gain an understanding of those budgetary figures versus what actually did occur. And then when we look at our fund balance sheet, we show the cash of $5,320,000, investments, the accounts payable to contractors, which means that would be payable within the 60-day mark. And then our fund balances, we've got committed encumbrances outstanding of $1.7 million, the fund balance assigned of $6,020,000, and for a total fund balance of $7,720,000. So our job is to create the journal entries to support these financial statements. So let's just take a look initially at the bonds. We see here that the city issued bonds and signed and encumbered $6 million in contracts. So our estimated proceeds from bonds, as we're able to tell from the financial statement, I'll go back here and show you, proceeds of bonds, we budgeted $10 million, we actually incurred $10 million. So we'll go back here and provide, based on budgetary, estimated bond proceeds of $10 million, estimated grant revenues of $2 million, and a fund balance of $12 million. This provides us with our estimated revenues and other financing resources. So when we go back here and look, we can see our $10 million here in bonds. We see anticipating and receiving a $2 million grant from the state, which we want to account for in journal entries. And this is providing us with our budgetary account balances. Then from there, we show appropriations of $5 million. Again, if we look back on the financial statements, we see that we budgeted for construction cost of $5 million, which would be part of those important budgetary entries. So fund balance, which would be decreased, appropriations of construction cost of $5 million, it records those appropriations. Then from there, let's take a look at the issuance of bonds. Now, the information did tell us that we received the $20,000 in interest. I'm trying to think what else it told us related to bond proceeds. I think that's pretty much it. So if we go back here again to the book, we can see that we have a bond premium of $200,000. We have bond proceeds of $10 million, and we have also showing us that we have bond issue costs of $50,000. Up here in the expenditures, bond issue costs of $50,000. So what we would want to do here is show our debit to cash of $10,150,000. We show an expenditure for those bond issue costs of $50,000. We have bond proceeds as a financing source. Again, remember that with fund financial statements, we don't care about long-term liabilities, and of course we don't record fixed assets in our fund balance, but we will provide the sources and uses as other financing sources and other financing uses in place of liabilities. So we'll show the face value of the bond of $10 million, and then we'll also report that bond premium here of $200,000. Now again, it's important to note that because of the premium, we received more than what was the face value. We could have treated these as two separate entries, shown the cash coming in of $10,200,000, and then in a separate entry showing those bond issue cost expenditures. Either way, the ultimate result here is going to be the same. Next, we will want to show that that money was transferred over to the debt service fund. So let's take a look back here at the $150,000. Again, non-reciprocal cash transfer of bond premium to the debt service fund. Non-reciprocal because this was a transaction that there was not an exchange. And so this $150,000 will be shown here as a financing use because we are just transferring this money over to the debt service fund, other financing use, and we're crediting cash, transferring over that premium. Next, we want to look at any investments. So again, if we go back to the financial statements, we see here an investment on the books of $5 million. So our next journal entry would be to record the purchase of these short-term investments of $5 million and credit our cash of $5 million. Next, we'll want to go back and look at the encumbrance for the contracts. If we look back on the paragraph that we saw previously, it told us that we signed and encumbered $6 million in contracts. So that would be a budgetary entry that we would need to provide to encumber $6 million. So our debit to encumbrances and our credit to the reserve. Also, we are familiar with the fact that we did receive a grant from the state, so we would debit this cash and credit our grant revenue of $2 million. We'd also want to record the interest that we earned from our investment, so we would debit our cash, and likewise credit our interest revenue. Now an important facet relates to our expenditures. The bills came in. Now we encumbered $6 million for construction costs, but we actually were invoiced $4.3 million. So we'll want to create a journal entry in order to reverse that encumbrance, to show then that $1.7 million that is still sitting as an encumbrance on the books. Basically, all of those journal entries will then provide us with the financial statements as shown here.